You're watching Masters in Trading Live with Jonathan Rose.
Hey guys, it's Jonathan Rose, and I have a favorite topic that I don't think that I've ever shared with you. So today, I'm going to be talking about that, and it's a way to buy stock at a discount from what it's actually trading at in the market. And I know that might seem crazy, but it's true. So today, I'm going to walk you through, it's got a really funky name. It's called closed-end fund arbitrage. Before I joined Investor Place, we had a little program called Hedge Fund Secrets. During Hedge Fund Secrets, I would teach people how to trade closed-end funds. There's really good opportunity in closed-end funds, especially for those looking for income or for those looking to make 12, 15% a year. So I'm going to walk you through a very cool trade I got for you today. Let me give you a reminder, guys. It is Wednesday, December 17th. We will be doing the live shows until Friday, and after that, we'll be done for the year because not a lot of trading goes on the 22nd and on. So let's get to the screen. We're going to have some fun today. Welcome, everybody. Thank you all for joining. Okay, before I get into the trade, this morning in our All Access group, we were able to take off a trade in lithium. Who had lithium? I've been talking about lithium longs for a while. We are still long one lithium name, but SGML. SGML, nice smart move this morning, trading 11.32. We shared a trade in SGML, buying the stock November 13th. Ooh, why did we do that? The expected move. What did we also do? In addition to buying the stock, we also sold some upside calls. Upside calls, we're able to lock in that trade December 11th. We made 43%. And then this morning, we were long from 6 and we got out at, 11.50-ish. So heck of a trade. Lithium on fire, glockenspiel for us. And then glockenspiel for our other members. Eck, he took it off a little bit earlier, 300%. These are from this morning. Roger locks in 83%. Livy in for 550, out for 1130, makes over 100%. And then Ken 100%. Scott took his SGML off a little bit early as well and locked in 317%. Glockenspiel too. Okay, let's get into closed-end funds. Guys, let me just get a Y in the chat. Are you familiar with closed-end funds? Y or N? Y, yeah, I'm familiar with closed-end funds. N, what the heck's closed-end funds? And why are we talking about mutual funds? You guys are going to like this. Lots of N's. I love it. That's what I want. More N's, the better. This is a very cool trade. Let me tell you how I got into this. AI, right? AI demand is accelerating, right? Across the board. The constraint is no longer going to be the chips. It's the land. It's the power. Physical data centers are the bottleneck. So, physical centers are the bottleneck. How can we invest long-term in this space? That's where my thinking goes. Why does it matter? Data centers are real assets with long-term leases, the land. Physical constraints, not enough land, not enough electricity, creates pricing power. Infrastructure owners benefit as demand, land, outpaces supply. Okay? So this seems like a really sensible place to be invested 3 years out. Very important. All I'm going to do is tell you the difference between an ETF, an open-end fund. An open-end fund is just your Vanguard mutual fund. Finally, a closed-end fund. Shares are created constantly. Shares are created in your mutual fund at the end of the day. Are shares created in a closed-end fund? No. it trades during the day just like stock. An ETF is just like stock, right? A mutual fund, your Vanguard mutual fund, you can't trade during the day. Closed-end fund, you can trade during the day. Cool. Price versus assets. An ETF has a net asset value and then a product trades. They're not the same, but they stay very, very close to the same price. An open-end fund, the net asset value. If I own Microsoft and I just own 100 shares of Microsoft in my fund, the net asset value is just the value of those 100 shares of Microsoft. So an open-end fund, they issue shares at their net asset value. What makes these things badass, what makes these things cool, is that these can trade above their net asset value, or they could trade below their net asset value. I'm going to explain more. Discounts and premium, rare? No, never. Okay, maybe in the early 2000s, but arbitrage has taken this away. So I'm going to say never. Open-end funds, never. But you know what is not never? Common. Income focus. ETFs not really for income. Open-end fund maybe. Income often high. These pay quite a big div. Why investors use them? Simple, long-term investing, income, and my favorite, inefficiencies. Education mitigates risk. Key opportunity, buying assets at a discount. Okay, you with me? We see the difference. ETFs trade, open-end fund, Vanguard, go buy a mutual fund. You're not going to trade that during the day, but your closed-end funds, they're secretive. You can trade them. They are very, very cool assets. So here's the trade. I'm going to introduce you a ticker. The ticker is RNP. This ticker provides exposure to AI infrastructure assets. RNP owns real estate and income-producing infrastructure. I'm going to walk you through exactly where it trades and why it trades there. Here is RNP on a chart. I'm going to just pull up another chart so you can see. You guys following along? It's making sense so far? This is what RNP looks like. RNP trading down to its April low levels. Good, good, good. Thanks, John. So the name that we're going to be talking about is RNP. Volatile. Comes down here, rallied like crazy. April it came down. Right now it seems like a really, really good opportunity to get in. But let me explain why. Why is RNP a good opportunity for us now? RNP is a closed-end fund that owns a diversified basket of real estate and preferred income securities. Excuse me. Right now, the current price is $19.56. Okay? Right now it's $19.62. Boom, right here. $19.62. The NAV, the holdings that it owns, is valued at $20.57. So right now, it's trading at a 5% discount to that net asset value. The average that it trades, it averages a 2% premium. So this usually trades at a premium to the net asset value. Right now it's trading at a discount to its net asset value. Now, closed-end funds, especially REITs, the biggest fear is that the Fed is going to raise rates. I don't think the Fed is going to raise rates. If the Fed doesn't raise rates, this trade's a winner. If the Fed continues to lower rates, this trade is a home runner. So look, the distribution rate is 8%. If we buy it at 20 and we get capital appreciation and also a really hefty distribution rate, that's really, really cool for us. But like I always say, education mitigates risk. Most important thing that you need for a closed-end fund is you need consistent dividends. So R&P, it's a closed-end funds. Closed-end fund prices can disconnect from asset value. Major institutions don't really play these because the industry is too small. So we go back to the distribution type. Smash that like button. Thank you very much. If you're enjoying this, guys, make sure you subscribe. Make sure you give it a like. We got a lot more to cover with RNP. So look, managed distributions means they are going to give distributions out monthly. Every month, the distribution is this. Here is what you need to watch out for. Consistency. We love consistency, right? The worst thing that can happen to an ETF or a closed-end fund or any company for that matter, when a company reduces its dividend. The market doesn't like that. The street absolutely hates when dividends are reduced. So you notice that dividends aren't reduced here at all, but I do need you to watch out for one important thing. And here it is. Here is the distribution history. Oh, wow, that's cool. Joe, you own this? Well, here's what you probably don't understand, Joe. Every month they're going to give you back 13.5 cents, right? What we need to do is watch out for this guy. This is scary. This is scary face with weird nose. Oh no. This is return of capital. So when they give you 13 cents, a little bit is your own capital coming back. Now in closed-end funds, at times this number could be concerning. This number is not concerning right now. It's pretty much split between the income and return of capital, but you'll notice the income is going higher and higher. I think this is an excellent, excellent opportunity. RNP, closed-end funds, guys, do not trade options. So the trade, and I want to pull up the actual closed-end fund page for you guys. Closed-end, there are two sites you can go to. Closed-end Fund Connect, CEF Connect, or CEFA.com. They're both fine. Let's look at RNP. Fund Screener. You can do really cool shit with this. Let's look at RNP. Discount 4.97. It's buying down here. I love it. It's a over a 1-year hold for people that want to get involved. It's a great way to play the data centers. It gets you long a basket full of REITs. It's trading at a discount. I'm not the biggest fan of sharing trades in the middle of December when we're getting close to Christmas, but I did want to share this. This is a really, really cool opportunity. In 2015, I spent a year and they gave me $100,000 to build a closed-end fund for a family office in Chicago. So this is definitely something I've done and something I'm extremely familiar with. And I was excited and wanted to share this with you guys. So that's what I got, guys. That's RNP. What we always do is we always hop off for our all access members. Our all access members get all our trades. And we also have a live class today for all of our members at 2 p.m. Eastern time. So thank you guys for watching. Make sure you give a thumbs up. Leave any questions you have in the comments, and we'll see you back tomorrow. All right, guys. Happy trading. Hey guys.